So to everyone in the chat, thank you so much for your patience and thank you for joining us today at the Canadian Virtual CPA PD Day. Anna, thank you for coming out today and speaking on CRA audits. So to give everyone some background on Anna, Anna's a tax lawyer and the founder of Advotax Law. She helps clients who are being audited or were reassessed by the CRA resolve their disputes with the tax authorities. Anna represents her clients at the CRA level, at the Tax Court of Canada, and at the federal court. In addition to her tax litigation work, Anna advises her clients on a wide variety of Canadian income tax, HST, and international tax issues. She helps business owners organize their affairs in the most tax-efficient manner. Most of Anna's clients are small and medium-sized businesses, as well as real estate owners, builders, and investors. So Anna, take it away. I will come on at the end of your session as well, just to outro you and let people know what's coming up next, okay?
Thank you, Jason. Thank you for having me.
Absolutely. Yep.
Good afternoon, everyone. Again, my name is Malazhavaya. I'm a tax lawyer. I help people who are going through CRA audits, and I'm here today to share some of the lessons I thought it was helpful to convey to my clients as they go through the audit. I understand that there are people with different background attending the conference. Some are very experienced in audits, some are less experienced in audit. So I separated my presentation into two parts. The first part will be about very general rules to keep in mind as your client is going through an audit, or the rules to educate your clients on. And the second part will be on audits at the times of COVID, the challenging times we're going through right now. How does it affect CRA audit practices? So I hope you I hope regardless of your experience level, you find something new in the presentation. So we'll start with something very, very basic, and but nevertheless, a lot of my clients still don't understand the answer. Why do we need CRA audits? And that's because we have self-assessment system, and it's really an honor system. Where the CRA, the government, trusts us to file our tax returns every year, but then to protect the integrity of our tax system, we as the society and the CRA as the agent of the government have to see whether or not we comply with our tax obligations. CRA processes and assesses over 25 million returns every year, so lots of work. As soon as you or your clients file the tax return, and then the notice of assessment is issued by the CRA. So normally we would expect to file that return for an individual sometime in April, and the notice of assessment would come in sometime in the summer. That date on the notice of assessment is a very important date. That's when the clock starts ticking for your reassessment period, meaning that the CRA gets to come in and audit you and reassess you, correct your mistakes in the tax returns within 3 years of that date of the notice of assessment. In most times, there are different rules for certain corporations and exceptions, but in general, unless you were negligent or fraudulent or careless in your return, the CRA only has 3 years from that notice, from the date on your notice of assessment, to come in and audit you and reassess you. If that tax return is not filed, that clock, I'm talking about that 3-year clock, never starts. So the first rule I'm going to talk about is the obvious: file your return. Start that clock. The return, when I'm talking about return, that includes information return. So your T1134s, T1135s must be included. If your client filed the return but did not file their T1135 with the return, that may give the opportunity to the CRA to go back and open that year even after the normal 3-year reassessment period is over. So that's why I see a lot of CPAs, including in their opinion letters and in their retainer agreements, whenever they provide an opinion on a transaction, that even if T1135 has no relevance to the organization, we like to see, just to confirm, you've advised us you have no property, foreign property outside of Canada with the cost amount of over $100,000, and if we don't want the CRA to come in after 6, 7, 10 years and be able to review this transaction because T1135 was not filed. Okay, so let's move on to rule number 2. Again, the obvious one: be prepared. You and your clients have the obligation to keep their books and records in such form as it would enable the minister to determine their tax liability for 6 years from the end of the year to which the records relate. Well, obviously, that 6-year time period does not run if you did not file your return, and then the 6-year period starts from the day when you filed your return, if you didn't file it on time. And also, it doesn't apply if you appeal in the reassessment of the CRA. So if you appeal in the reassessment of the CRA, you must maintain those records that are relevant to your appeal. So what if something is not a book or a record? Do you have to keep it for 6 years? That's a very good question. And there's some case law, interesting case law, about whether or not something like your tax lawyer's memo or your tax accountant's memo, whether it was a book or a record that you had to maintain for at least 6 years. So just something to keep in mind as you organizing your business, or your client is organizing their business and their policies for storing the documents. So let's see, if your client was selected for a CRA audit, it happens, and the client is probably one of many taxpayers going through this at the same time. The exact number of audits carried on in Canada by the CRA currently is not, we don't know how many audits are carried on at any given time or in a year. That information is not available. But according to information from some of CRA officials presented at the 2019 Ontario Tax Conference, there are 7,700 audits of small and medium-sized businesses per year in Canada. That means, strictly mathematically and unscientifically speaking, that if you're a small business, and there are different small businesses, from sole proprietorship to smaller corporations, you have, and there are 1.2 small businesses in Canada. So if you're a small business, you have 0.5 chance every year to be audited, and this is just strictly mathematically, just for fun. If you're a medium-sized business, your chances of being audited are almost 7.8%. So there are 23,000 medium-sized businesses in Canada. Out of them, almost 1,800 get audited every year. So just something that clients like to know as to what are my chances. You can give them these chances. They're totally, they're not precise, but it's the information they like to hear. So why do bad audits happen to good people? So that's the first question this year the client normally asks us. Why me? Is that my neighbor? Is that my ex-spouse? Is that my bad business partner? Why was I selected for that audit? Or why was my business selected for the audit? So how does the CRA choose taxpayers for an audit. So obviously there are sources within the CRA, very sophisticated technology that is designed to identify taxpayers whose financial records look atypical for the industry in which they operate their business. For example, their expenses are disproportionate to their income, or they have large business losses year after year. So there is, and as time goes on, there is the CRA invests a lot of funds into this technology, and it becomes very effective, very sophisticated in identifying different types of non-compliance. So that is a huge source for the CRA to identify people who may not be compliant. Inconsistency with third-party reporting, that's an obvious one. If you're if let's say your bank filed with the CRA information on your earnings, but you did not include those earnings in your tax return, that will be relatively easy for the CRA to identify, and there is a lot of tools for them to do that. And last but not least, CRA audit initiative programs within the CRA that are very well funded by the government and have become quite effective, especially the first one in my list, the real estate transactions category. There is a big project undertaken by the CRA starting from approximately 2017-2018 to identify non-compliance in the real estate sector, in transactions involving buying and selling real estate in the GTA and Greater Vancouver area. And it brings a lot of revenues to the government. Cash-heavy businesses, the CRA has a project for them. Tax shelter programs, I'm sure everyone may have heard about at least one audit involving a tax shelter. Offshore tax structures, cryptocurrency is the new one and a popular one. Social media influencers are now under the CRA's radar. It's the latest project that they've announced, and I think it'll be interesting to see how what technology tools or what information the CRA will use to identify influencers who may or may not comply with their tax obligations. Okay, so we talked about sources within the CRA that may flag you for an audit. Now we're talking about sources outside of the CRA, and the very interesting one is the unnamed person request for information. So this is when a bank or a business like Home Depot or a cryptocurrency exchange receives a letter from the CRA requesting the release of the information of their clients. And a lot of times those requests are quite broad. Just to give you an example, very recently, literally a few weeks ago, CoinSquare, the most popular cryptocurrency exchange in Canada, received a request to release their information on all clients, all accounts, starting from 2013, nonetheless, to 2020. The CRA can get that compliance order through their application to the federal court, and this is what they tried to do in September of last year, 2020. And CoinSquare disputed that request, saying that it was too broad, and the group of the taxpayers included in the request was not ascertainable. And as such, CoinSquare refused initially to provide all the information, but we now heard from CoinSquare that they've reached a settlement agreement whereby they would provide to the CRA information on some clients with the account value over $20,000 as of December 31st of each year, 2014 to 2020, and the largest, the most active accounts by trading volume. So just an interesting example of how the CRA will identify cryptocurrency investors who may be subject to an audit soon. A lot of you may have heard of Coins or Home Depot situation a few years ago. I think it was 2019, in the fall of 2019, Home Depot had to produce to this CRA information on their commercial credit clients who had large balances on their credit accounts. And that presumably the CRA used that information to identify clients whose purchasing volume was inconsistent with their tax reporting. So that would be people in construction industry, clients of Home Depot who would purchase materials for their contracts, and those numbers may or may not be consistent with the numbers reported on their tax returns. And there's always the option that your ex-wife may be successful in reaching someone through that CRA tip line that we have available, although I hear they're quite busy and it's very hard for them to separate real tips or real reports of tax non-compliance from not real reports. If there's something in public court records that would indicate that you may not have reported all your income, you may be selected for an audit. There are people within the CRA assigned to monitor just that. Similarly, police, if you were arrested for, let's say, for example, a drug-related charge, and the police found a mountain of cash in your home, chances are after you get out of jail, you will get a call from the CRA as well. And banks, it's quite unusual for them to be the informant, but there are programs implemented whereby banks would have to provide some information to the CRA that may flag you for an audit. Really, anyone. And finally, last but not least, the CRA's Offshore Tax Informant Program, the so-called OTIP. That's that provides the ability to anyone, to any person, to provide information on offshore tax non-compliance of someone else. And this is interesting, if the CRA is successful in reassessing and collecting the tax owing, the informant may be entitled to a monetary reward. And that reward can be anywhere from $5,000 to $15,000 of the tax collected. And to get the reward, to be entitled to the reward, the tax collected must be over $100,000, the federal tax collected, not including interest and penalties. So I did hear that some practitioners actually make it a portion of their practice to assist their clients in reporting their former business partners to the CRA using this offshore tax informant program. So not only do they find a way to enjoy the revenge against their former business partner, but they may even benefit if any tax is collected from the said former business partner. So first, contact with the auditor, what to do. If in what to educate your client on. If your client is contacted by phone, usually the best course of action is to politely take the information and and get back to the caller after certain steps are taken. Number one, goes without saying, fraud, phone fraud, where callers try to defraud elderly and vulnerable clients by posing as CRA agents. That fraud is quite common. So I always ask clients to take the information, as much information as they can from the auditor, and then tell them that they would call them back once they can verify their identity, or they talk to me, or they do something to protect themselves and their identity. It's completely okay not to answer all the questions right away. So if the auditor calls you and starts asking questions right away, it's completely appropriate, and the client should know that it's okay to say that it's not the best time to have that conversation, and they will take down the information and they would get back to the auditor. They're not breaking any rules by doing that. And that leads me to my rule number 4, educate your clients not to answer questions without professional help. It's always, always better for the client to know that they have to speak to you first before they respond to any questions. Now, of course, the CRA has the power to interview your client in your presence or not. So there is that option, but in any event, it's better to be prepared for that interview as opposed to just take that call as you were in the lineup at a grocery store and just answer any questions the CRA may have. It's always better to be prepared and have a professional by your side. So rule number 5, again, relevant to the other 2, do not provide documents to the CRA without professional help. So a lot of times clients are asking, so what are the CRA's rights in requesting information? What can they ask for? And my answer is, unfortunately, the CRA's powers and their investigative powers are quite broad. They can ask for any books and records beyond any document that helps them determine your tax liability during a period. So that definition is quite broad. They can ask for it. They can use their investigative powers to just request it or obtain it on their own behalf. They can use something called RFI, request for information. It's an official document they may issue to the taxpayer or to a third party, like your bank, for a copy, for example, of all your bank statements from 2015 to 2017, and the bank would either provide that information to the CRA, or just would have to dispute the request in court or face criminal charges. It's quite serious. So most banks just release that information without much hesitation if it's requested in a course of a regular audit and it's the scope is reasonable. And finally, if some information is not provided voluntarily by the taxpayers, then there is the option for the CRA to go to court and request an order, compliance order, whereby you would have a court order mandating you to produce whatever documents the CRA is asking for. So the CRA is quite powerful in that regard. They're powers are not obsolete, but they're quite broad. So the next question the client would ask is, can I refuse to provide a certain document? Well, and the answer, as always, is it depends. If it's a document, any document that would help CRA determine your tax liability, can be your utility bill, can be, I don't know, the drawing of your plan, of your house plan. It can be a lot of, it can be any information that would help the CRA determine what your tax situation was 3 or 4 years ago. You don't have to, in fact, you should not produce documents that are privileged. And by privilege, we're talking solicitor-client privilege. That's information provided to client in the course of obtaining legal advice from a lawyer. And litigation privilege, that's information shared in the course of preparing for litigation. So that area is quite interesting, especially as it relates to accountants and lawyers, because we often work together, and our roles and the way we help clients, our areas of influence often interlap. But it's important to keep in mind that as we work to help our clients, it's important to protect privilege when it may become important later. Privilege and accountants. Advice, tax advice provided, or tax dispute resolution advice provided by accountants is not privileged unless it's prepared at the request of a lawyer to be used in connection with litigation, current or anticipated. This is to say that if your client comes to you and tells you a story about cryptocurrency investments that he had and did not declare and has no plans to declare, theoretically, you can be called to court as a witness, where you would sworn or affirmed, and you would have to share that conversation with the judge about your client's intentions about your client's, the information your client shared with you. So that means that when you have a feeling that the situation is becoming uncomfortable, and that may put you in an uncomfortable situation later if you get called to testify, that's the time when you should pick up the phone and call your tax lawyer, or maybe suggest the client to go see a tax lawyer instead, so that the client gets the protection of solicitor-client privilege and you spare the inconvenience of being then dragged into court proceedings. So just a few examples of how accountants and privilege work before in tax court cases. In ZLDAP Corporation, the meeting with a lawyer and an accountant that took place 3 years prior to the reassessment in question did not qualify as privileged, because it was not, because whatever information was shared between the parties, it was not in anticipation in connection with litigation. So it was way before the reassessment even took place, and as such, it was not privileged. So the advice provided by accountants is not privileged unless the accountant is used as a representative for explaining facts to the lawyer in the course of providing legal advice. So just to give you an example, in Mutual Life Insurance Corporation, an accounting memo was sent as an attachment to cover letter prepared by a lawyer, and that letter contained legal advice that was privileged. So by association, in that case, the accountant's memo also was protected by privilege. In Imperial Tobacco Canada, however, the accountant advice was not required for legal advice, and therefore it was held that it was not privileged, and that accountant advice, the information on that accountant advice had to be revealed to the CRA audit. Okay, during the audit, so depending on how much audit you do in your practice, the CRA, you know what happens, right? Your CRA reviews your books, your records, there are lots of meetings, letters, phone calls, boxes of documents, collected, copied, scanned. How long the audit may last, it can be something very short. I think 1 month was my record. My entire record was 6.5 years. That's how long one audit took. And I'm sure it's not the worst situation, and some of you may have audits that are even longer. So my rule number 6, as soon as you know that what the audit may be about, and a lot of times we kind of have an idea, sometimes not, sometimes it's a general audit, sometimes we have a feeling where it's going. I like to pull up the CRA audit manual, and I like to check in what the CRA tells their auditors to do as they go through my type of audits, just so I know what to expect for my client, for myself, what questions to expect, what requests to expect, just so I know what's coming and the client knows what's coming. It used to be that the audit manual was also was only available in one of those databases like TaxNet Pro. You had to pay for access to it, or you had to share it, or you had to ask your colleagues to share with you. Now it's available to anyone on. You can Google CRA audit manual, and it's available on CRA website. So that's the link for the income tax one. And if you want a better option to search it or to see commentaries on it, you can refer to TaxNet Pro. Okay, rule number 7, and again, this is basic practice management point. I like to have a little talk with the client when I anticipate a big audit, that now is the time to sit down and maybe think about how we can organize ourselves. Maybe there should be an employee within your client's organization whose job, partial or full-time, depending on what's going on, will be solely to keep things organized, prepared for the audit. Because a lot of times it's a lot of time and stress and documents, and if you're not paying attention and if you're not making any efforts to keep yourself organized, it can paralyze your business. So just to prepare, to manage the client's expectation on how fun, and quotation mark, is going to be, I like to sit down and tell them that, okay, it's going to be time consuming. Let's think how we can manage our resources. Rule number 8, communication with your auditor is very, very important. And you know, auditors are people. They're all different. They have their own life experiences. They have their own work experiences that kind of influence how they approach the audit and how they perceive information. I like to remind clients that we have to mind this imbalance of power. It's this temporary imbalance of power. Because say what you want, but your auditor has a lot of power, right? And so your auditor may reach a decision based on the information available to him or her, and may not put as much weight to the evidence you want them to consider. So your auditor is a mini judge, and it's a temporary situation, but nevertheless, if your goal is to resolve the dispute as soon as possible, you should mind that imbalance in power. That means simple things: be polite, respect the deadlines when they're set for you. Don't let clients say or do something that's clearly disrespectful. It's not good for anyone. It is okay to ask for extensions, time extensions, to provide your submissions when it's appropriate to do so. When you're dealing with a difficult question or you need to request documents, it is okay to sometimes push back or escalate it to the team leader, or even file a service complaint when the situation warrants it. A lot of practitioners may have told you that they've noticed a certain push to complete as many audits as possible before March 31st deadline within the CRA. I understand that somehow correlates with the fiscal, with the reporting period that the agency has to follow. So there's sometimes we see an unreasonable push to complete everything before March 31st. So my advice would be to politely push back and remind the auditor that we want to resolve this as soon as possible, but sometimes it's not practicable and it's not fair to your client to be rushing completing the audit before March 31st just because there's a reporting deadline for the auditor. Letter of proposal. Letter of proposal is a letter where you get the CRA's preliminary decision as a result of your audit. So you would, it's really a proposed reassessment. And a lot of times you have 30 days to respond to that reassessment. My single piece of advice is to bring out the big guns to respond to that proposal. Why? Because now is your chance to resolve your tax dispute in the fastest, the most efficient, the least expensive way. So if you see that proposal and if you don't like it, now is the time to maybe invest in the best professional you can afford to respond to that proposal. And if that professional is yourself, great. If you feel that it's not your industry, maybe it's worth it to advise your client that now is a good idea to invest in a professional so that we have a chance to just resolve it now. We don't want to go to appeals. We don't want to go to court. We just want to resolve it. So let's get the most experienced, best expert in the field. And if it's practicable, we can resolve it without having to go through CRA appeals and without having to go through tax court. Notice of reassessment, that's an important document, and it contains the CRA's position on how much tax you owe for a certain year. So they've audited you, and they think that that notice of assessment prepared, that they issued based on that initial tax return you filed was incorrect, and you, for whatever reason, there are errors of misrepresentation in your tax return, and there is correct assessment is reflected in that notice of reassessment. The most important thing to remember, if you remember nothing else from this presentation, is to remember the 90 days deadline to file the notice of objection. You only have 90 days, and if you miss that deadline, there are certain tests your client has to meet in order to be able to apply for an extension of time to file the notice of objection. So the client may have 12 additional months to file that notice of objection, and after 15 months, that's it. No appeal rights. It doesn't matter if your client is right or wrong. Doesn't matter what happens. There are no exceptions. You are done, finished. And if something is not done, then it's a potential claim for professional negligence against us tax professionals, CPAs or lawyers. Whoever is dealing with client and whoever can be blamed for not filing that notice of objection may be blamed, may be sued by the client. The rule applies even if the client did not pay you to file a notice of objection. So regardless of whether or not the client paid you to file the notice of objection, always, always, always document the client's instructions. If they're unclear, if there's any miscommunication, any uncertainty will be interpreted against you as a tax professional and not against your client. So if the client is unsure, send that email saying, I understand you told me not to file the notice of objection, or you asked me to file the notice of objection, but you didn't pay me. Just so you know, I am not filing your notice of objection. You have to find another CPA or tax lawyer as soon as possible because I am not helping you. It has to be crystal clear to everyone involved. Otherwise, you are exposed to liability. Okay, CRA audits at the times of COVID. Things to remember. Some time limits were changed, adjusted, both for the CRA to reassess, so the reassessment periods may be calculated differently, and for the taxpayers, to object or appeal. Again, time limits were adjusted because of the pandemic situation and the lockdown we were facing in March, April, May of last year. So when you consider something, when you consider whether or not a certain time limit was met or not, take into account the new piece of legislation that came out late last year, Time Limits and Other Periods Act. Just take a look to make sure your time limits are determined, taken into consideration this legislation. Interest relief, because we're facing unprecedented financial situation and a lot of people are out of work. Proactive interest relief was granted and is still being granted almost automatically on the periods from April 1st to September 30th of last year. So the dates here are last year dates, 2020. And so same applies for audits and for new reassessments and new tax debts. That period in 2020 normally is exempt from interest. And additional relief may be available on a case-by-case basis. I'm talking restaurant industry, entertainment industry, who is really, really suffering right now. These are the industry where I think it's reasonable to ask for relief, and hopefully we will see the government being reasonable and providing some relief to business owners who are already struggling because of the pandemic. Some audits are currently on hold because the auditors previously assigned to them were reassigned to help with various COVID support programs, be it SUS or CRB or SERP last year. So we see a bit of a decline in the audit activity of the CRA, or they don't start as many audits as they used to. And we explain it. We understand that this was due to the fact that the resources, CRA human resources, are assigned to COVID support programs. Because accountants' offices are currently, a lot of them are operating on a remote basis, and it's not as easy to visit your branch at the bank, or it's not as easy to obtain some information from your bookkeepers. A reasonable requests for an extension of time are appropriate if you cannot retrieve a certain document because of because of the lockdown, or because your the source of that information is not working because of COVID. It's reasonable to ask for an extension of time, but the CRA is very cognizant that some requests may have been made with an attempt to abuse the system and reach the statute bar date, so that the reassessment becomes statute barred. So reasonable extension requests are allowed, but don't try to game the system. The CRA is watching you closely. For wage subsidy audits, for CWS audits, the CRA generally expects all the documents to be available, because their position is that you just made that determination that the subsidy was available to you. You didn't have time to put those documents away. So we just want to see them, and we want you to provide them to us as soon as, as reasonably possible. So audit priorities were assigned given the situation. The high risk audits are now the CRA's priority. And I understand that real estate sector is still being audited quite actively. Other audits, we may see a bit of a slowdown in how the audit is progressing, because again, the auditors are doing something else. There is very little, I've seen no audits where a face-to-face contact with the auditor would be required. So no site visits, no in-person interviews. We had a phone interview that lasted 7 hours, and recently for one of my clients. So before it would have been a live meeting, now it's a 7-hour long phone interview. So to summarize, 10 rules to keep in mind and educate your clients on as they are going through CRA audits. Rule number 1, file that tax return with all the forms. Start that clock. We want the clock to start ticking. Rule number 2, be prepared to keep your records. Rule number 3, when contacted, be polite and take a message. Buy yourself some time. Talk to your tax professional. Rule number 4, do not answer questions without professional advice. Number 5, do not provide documents without professional advice. They may be privileged. They may be outside of the scope of the audit. Rule number 6, review a relevant section of CRA audit manual so you know where this may be going. Rule number 7, budget for time and expense. Organize yourself, or ask your client to organize themselves. Communication is key. The auditor is a human just like you. Think about the ways you can work together. If you think that narrowing the scope of the audit is a good idea, talk about it, raise it with the auditor. Rule number 9, bring out the big guns to respond to the letter of proposal. Now is the time to invest in the quick resolution of the tax dispute. And rule number 10, remember 90 days. Make sure your client knows about 90 days limit to appeal the notice of reassessment. And whatever decision the client makes, put it in writing, don't get sued. So these are all the tips I had for this presentation. If you have any questions, I'll be happy to address them.
Hi, Anna.
Hi, Jesse.
I just wanted to come on and say thank you so much for the presentation. I was sitting through it. You know, unfortunately, as a non-tax professional, there's a lot of things that went over my head, but I'm sure they will be relevant to people who have attended the event today. We do have a couple questions in the chat here. People are just asking if you would be able to share the slides with them after the event.
Of course.
Yeah, so I just want to let attendees know, Anna, if you're able to provide us the PowerPoint file, we can share that with attendees after the event through our email. Okay?
Of course.
Alrighty. So again, thank you for the presentation. And if you want to put in your contact info in the chat so people can reach out to you more easily, because sometimes it's you know, just an extra step to type that out yourself, and people can make spelling mistakes and all that kinds of stuff. But to everyone in the chat as well, thank you for attending Anna's session. This is one of our last sessions for the day. We don't have any more sessions after this. We do have the panel on the main stage of the panel of experts. So you can find that either on your left, or I'll also just send the link in the chat here right now. So that will take you directly to the event stage, and you'll be able to see our panel, which I believe has started already. So again, thanks so much for joining us today. And I will sign off. You're welcome to answer any questions that come in and provide more info in the chat as well.
Thank you for having me, Jess.
All right, thanks so much. Have a great afternoon.
You too.